to the inaugural edition of The Monthly Blend, a monthly video podcast brought to you by Next, powered by Shulman Rogers, and the Big Idea CONNECTpreneur community. I'm Tian Wong, founder and host of the Big Idea CONNECTpreneur community, which is a global community of over 20,000 investors, founders, and business leaders around the world. I'm also CEO of Opus 8, which invests in fintech, health tech, and marketing technology companies through our Phoenix Fund. Opus 8 also helps companies and alternative investment managers raise money through our network of over 5,000 accredited private investors, angels, and family offices throughout the United States. Along with my co-host Anthony Mellon, who's the founder and chair of Next, powered by Shulman Rogers, we are pleased to bring you this monthly video podcast, which will cover trends, information, interesting research and tidbits, as well as fascinating interviews with game changers and newsmakers here in the Washington, D.C. metropolitan region, also known as the DMV. Thanks for joining and enjoy.
I am Anthony Mellon, and I'm so excited to be co-hosting the Monthly Blend with Tian Wong. I have spent the past 20 years in the startup ecosystem as a serial entrepreneur, a venture capital partner, and a startup attorney. I am currently a venture partner with Urban Us, a seed stage venture capital fund focusing on urban tech, and I am also the founder and chair of Next, powered by Shulman Rogers, an innovative new model for the delivery of legal services for the full life cycle of startup and emerging growth companies. Through Next, we offer startups predictable legal fees through a broad range of fixed price packages and service bundles. These are delivered by senior attorneys in a high-touch, hands-on approach, and we incorporate a robust technology platform that offers a collaborative, efficient, and transparent client-centric experience. The DC startup ecosystem is filled with so many passionate, smart, accomplished, community-oriented entrepreneurs, investors, advisors, educators, and other participants. And we are so excited to be offering the Monthly Blend as part of the startup ecosystem.
Welcome, everybody. It gives me great pleasure to introduce Owen Douglas, who's managing director of Motley Ventures, which is a relatively new $150 million venture capital fund incubated and started by the Motley Fool, which is the famous publishing and research company based in Alexandria, Virginia. Motley Fool Ventures is an early-stage tech-focused VC fund powered by the Motley Fool's brand. Their focus is on Series A companies leveraging technology and innovation to drive scale, efficiency, or access in existing large markets. Prior to creating Motley Fool Ventures, Owen was the chief financial officer of the Motley Fool. He's very active in the local and regional community. He's one of my really favorite VCs and serves on numerous boards throughout the region of some very promising companies. Welcome, Owen.
Thank you for that introduction, Tian. It is quite a pleasure to be here. And hello, Anthony, as well.
Great. I'd like to welcome Anna Mason, who's a partner with the Rise of the Rest Seed Fund, which has been started and incubated by Revolution LLC, which is a Washington, D.C.-based national venture capital and growth equity firm. Anna will be talking to us later about her activities in investing around the country in numerous second and third tier markets that usually don't get the attention of sort of the big East and West Coast markets. Prior to starting the Rise of the Rest Seed Fund, Anna was at Revolution, and she is also the chairman of the board of advisors of the Veneta Project, which is doing some great things, and can't wait to learn more about what you guys are doing, Anna. And she also is a successful entrepreneur, having co-founded a West Coast early-stage company, which was successfully acquired. And prior to that, had a storied career, I guess, right, in distressed debt and high-yield trading with some large Wall Street firms. So welcome to the show, Anna.
Thank you, Tian. It's so great to be with you and Anthony, and congratulations on kicking off the Monthly Blend. Super excited to see it come to the DMV area.
Well, we're thrilled that you and Olin, who are two of our favorite VCs in the world, are our inaugural guests. So thank you for taking the time to be with us.
Thank you. Excited.
And thank you, Anna and Olin. So what we'd like to do now is start off a discussion really focusing on the VC market in the DMV. And what I'd like to do is to just have you both describe from your own perspectives how the VC market in the DMV has grown and changed both on a macro level and more recently as a result of COVID when you look at the market today versus just say 3 to 5 years ago.
And Anna, why don't you start?
Sure. Well, I'll start with COVID, actually, as I think it's hard to have conversations these days that don't start with COVID, as we all find ourselves existing in like a state of suspended animation here in Zoomland, USA. But we are, both with respect to DC specifically and rising cities all across the country, we're optimistic that this what we call like shake the snow globe moment when it comes to redistribution of talent and opportunity is really going to inure meaningfully to the benefit of cities like DC all across the country. And it might be the bias of my Twitter feed, but not a day goes by that I don't read about someone leaving the Valley and relocating to other cities all across the country because they can and they want to. And so there's this great opportunity now for cities like DC, and it's really ours to lose in many respects, to reach out and bear hug and grab that talent. And it's, there in some ways I think might need to be a shift in mentality from the economic development authorities, mayor's office, and other, leaders in the city to think about economic development, not necessarily from a B2B standpoint and acquiring, trying to acquire and attract new businesses to move to the region, like DC did so successfully with Amazon and HQ2, but to instead actually start to think about this as a real B2C opportunity, D2C opportunity. And this is really our moment for our city and our region to acquire human capital and talent directly, because now that people can work from anywhere, we want to increasingly make the case that they can and should work from DC and the DMV in our region. I think one of the sort of ingredients in the secret sauce of the DC startup ecosystem that has long been of benefit to us has actually been the transient nature of the community that we've got here, because, our anchor tenant is the federal government, and you have tons of talent that continuously, flows in and out of the capital. And I think what happens is, we see a couple things that I think happen that are great for the DC community. And we continue, I think, to see that. One is, people come in, want to work in the public sector, public service, serve the country, or, in some capacity. And then there are great opportunities on the other side of that when you cycle out and you go into the private sector. I think that has helped contribute to making DC a leading ecosystem for social innovation and tech entrepreneurship, for example. And I think we'll continue to see more of that. So now you've got that flywheel that continuously turns and will likely never stop. You've got the, secondary and tertiary impacts and hopefully opportunities we'll see from Amazon's HQ2 located just across the river here. And then you'll have this shake the snow globe moment with COVID, where, we think we'll see their talent redistribution. And in a lot of ways, we'll see boomerang talent with folks who are have ties to DC, grew up here, went to school here, have their families here, who are looking to relocate here more permanently. Anecdotally, we're seeing that with some of our companies in the area who want to hire. We're seeing them attract talent on that front. We've recently added 4 new team members to our team at Rise the Rest. New folks moving to DC or moving back to DC. We hope that is not really just an anecdote, but the data will bear that out as we take a look back in the next 6 to 12 months.
Thank you. Owen, do you have anything you'd like to add to that?
Fascinating comments, Anna, and just thinking about how we're positioned and think in this area. It's great. I think for me, 5 years ago, I wasn't even in venture capital. So it's a little bit of an interesting perspective. But, thinking about that, I did some quick research on PitchBook. And generally speaking, the DMV area, if you stretch a little bit to Baltimore and down to, Virginia, launches about a dozen VC funds a year during that same time period from 2013 to 2020. But what has changed is you look at the composition of those groups. In some of the earlier years, there were quite a few, I would say, names tied to institutions, whether it was Innova that had a bunch of funds back then, the University of Maryland and their series of funds with TEDCO and others, and just a couple of other kind of Lockheed Martin had some funds back then. As we move towards the future, more and more of the more traditional structured VC funds are coming into play, and some of the older, more established names are still there. But it seems like we're building this new crop of earlier stage investors, whether it is Rise of the Rest, which has been amazing not only for the country but particularly for this area, and the Motley Pool, and there's quite a few other funds. And then the other trend I see is earlier on in those years, there were lots of accelerators and incubators, but nothing for those companies to graduate into. And that is the biggest change that I see now, is that we are building what's starting to be a nice foundation of kind of seed and Series A level funds where we can help these incubators and accelerators that are kind of growing these companies to reach that critical level of funding where in the past a lot of people would leave the area. They're now able to stay and have multiple options in that area.
In terms of the new funds that are coming in, I have seen that there is a lot of first-time funds starting up around the country. What kind of support and what do you think it's going to take to kind of have some of those first-time funds start here? What could be done to increase their likelihood of success?
At the beginning, it really is about, making sure that those funds can get funding from the LPs, getting them connected into the high net worth ecosystem, getting them connected into people who invest in those funds in order to give these new folks coming into there the opportunities to go out and succeed. We've been looking at quite a few emerging funds for a program we're working on, and there's really a lot of talent out there. And again, it's really about, as is in many cases, it's not a lack of talent. It's a lack of ability to connect capital to that talent. And Anthony, I think that's what we have to do. I mean, supporting the ecosystem really means supporting it at multiple levels, supporting the companies that are starting so they understand what venture capital is about, supporting the emerging managers, we're helping them to find potential investors in the fund. And then I would also say, one of the things I felt like we've really benefited from is there's really a collaborative nature in the area. A lot of times, I would say Rise of the Rest and Motley Pool Ventures are looking at the same kind of companies. I've never once felt competitive with them. In fact, I feel like they've done a great job of being welcoming and supportive and doing what they can to help us succeed. And I think we all have this mindset, is that together we have this unique opportunity to do something that's really big for the region. And if we can create a winning environment for the region, there's plenty of room for Rise of the Rest. There's plenty of room for Motley Pool Ventures and lots of other people at the table. So I like that we're building this big collaborative table for that will help all of us succeed.
I think for us, it's about increasing the pie, right? It's not necessarily about whacking up the pie. And as many who are familiar with Rise of the Rest, even a little bit, probably know that we see opportunity first through the lens of geography. And we always harken back to the statistic that continues to be sobering when you think about the democratization of access to capital in the venture community, which is that 75% of venture capital continues to go to California, New York, and Massachusetts. And so when you think about the great opportunity of the continued emergence of, what we would call, regional microfunds that are coming into the market, that's great opportunity for all of our rising regions, including the DMV. And it's not about DC versus Baltimore versus Virginia. It's not about the Motley Fool versus Rise of the Rest. It's about all of us together as a connected network and as an ecosystem. Because right now, a lot of the reality that's sobering is a lot of the cities are, competing for a relatively small part of the venture pie. There's over $100 billion that gets invested into venture every year. So with Rise of the Rest, we've long taken the approach, we call it catalytic co-investment capital. So that's an alliterative mouthful, but it's a fancy way of saying we don't throw sharp elbows. We like to be friendly and helpful investors and good partners, not only to our companies, but to our co-investors, because it's all about strengthening the regions where we invest more broadly, which is why I think we have long taken the approach of, kind of getting in the weeds with our portfolio companies, the investments we make, but also having the opportunity to take a step back and take that view from 10,000 or that view from 30,000 and take a broader holistic look at the ecosystem and all the players in there, because these companies in DC or otherwise can't succeed in a vacuum. You need strong ecosystems and collaborative partners and investors to help everyone rise.
In terms of the ecosystem, when you look at the different strengths and weaknesses, each region has certain strengths and certain challenges. What would you say are kind of, and you have the perspective of seeing things across the country, what are the things that really stand out as our regional strengths? I know you mentioned the federal government as an anchor tenant, which is, is clearly their strength. What are some of the areas that stand out for you and what that we should continue to really drive forward? And what are some of the areas that we're more challenged in that you'd like to see strengthened in some way?
Well, I'm very biased on this front, but I'm wildly bullish on DC and the DMV region as a beacon for female entrepreneurs and women in the industry more broadly. I'm a proud DC transplant. I moved here 5.5 years ago, married into a family that had longtime DC roots. My 2 little girls, my 2 favorite startups, are 5th generation Washingtonians. The other way to look at that is that we are never leaving. So DC is my adopted city, and I'm likely now a lifer too. And one of my first impressions of the city that has only strengthened in the last 5 years is just what a rocking, extraordinary community of working women we have, and powerhouse women exist in DC. Again, many come out of the public sector and federal government, but there are many in the private sector as well. Number of women in major leadership roles in the real estate community and the financial services community across, government services and, cyber. And it's extraordinary to see. And it's, as a woman in the industry, it's inspiring. And there's a real opportunity to find community within the community here. And I think there have been a number of great efforts that have helped to pave that path. I think COVID's made it obviously a little bit trickier. The other component that I would say has long been, a major piece of the unique DNA and secret sauce of this area is DC's ability to network like no other. I think we live in a community where we're actually really used to networking and going to events, and it's not uncommon here to have 2-3 events per week, morning, afternoon, evening. It's the way DC is wired. And I think it's really helpful to the startup community, it's the venture community. And obviously that's just been so hard these last 6+ months when we haven't been able to convene in person. And so thinking about, I think that's it's a challenge and an opportunity that we're all faced with in different ways to just reimagine what the future looks like. I think there's a pretty broad expectation that coming out on the other side of this, there's going to be some sort of hybrid model. So how does DC react to that? What does that look like? I think is a great challenge for all of us. But those are 2 things I would point to in terms of what really makes DC special and the DMV special.
Yeah, and I definitely agree with those. And then just kind of to double down on them, that collaboration which comes out of that networking environment, I think is really important. I mean, Tien has been awesome. From the minute we told him we were thinking about launching a venture fund, his reaction was, well, let me introduce you to everyone, and that's usually the reaction I get when I tell people, sorry guys, all my friends are accountants and lawyers. They're like, no, you got to get out. There's more people than that in the world. Let me introduce you to everyone. And I think that idea, when I hear you, Anna, and I know this already, but on the board of Veneta Project, I'm on the advisor to Conscious Venture Lab. I think it's very common for us in the VC community to be making those direct ties with the groups that are kind of feeding the ecosystem. And I think that's one of our strengths, is this collective idea that I think that we all have, that we want this region to succeed. It's been rare that I've run into someone that was really just focused on growing their firm without context of how it's going to affect their region. And I think that's a really big strength of ours. And again, just expanding a little bit on what you said, the multicultural environment, again, in DC, that's not unusual for us. It's actually more unusual to walk into an environment where it's not kind of, you don't have that broad representation. So I think that there's still opportunities for us as the capital allocators to ensure that capital is getting distributed broadly. But I think the pieces are in place for us to really stand out and be a model for other places in the country.
And, Owen, I want to pick up on one last thing you said, to actually, I'll spend a little bit of time just reflecting on where we are at from the broader life cycle of our ecosystem as it continues to mature. I was so proud and grateful to be a core part of the initial founding and growth of the Veneta Project here in DC. But I'm actually no longer on the board there due to my growing work commitments with the Rise of the Rest, as we've gone from 0 to 300 million under management in the last couple of years. And, two little startups at home, I had to transition on my end. And the Veneta Project is now chaired by Natalie Buford Young, who's also a longtime champion. And actually even earlier, she was involved even earlier than I was, back in the OG days of the Veneta Project. And, there's tremendous new local leadership in place, from the directorship standpoint. And I think that smooth transition, and to continue to see that organization grow and thrive and bring new members into the community, is a testament to the strength and stage and cycle of the DC community. Because in so many ecosystems and startup communities all across the country, this question of succession planning is actually a big one, because you have a lot of organizations that start and evolve and end up actually getting centered around just a handful of people. And so when you have an organization, and Veneta is one of many in DC that I think speaks to this point, where the organization stands alone, and the brand that I think has been built and established and resonates with different people in the community continues to pull people in as leadership turns, as management turns, is a really tricky component of the ESO, or entrepreneurial support organization universe, all across the country. There have actually been organizations that have formed to try to figure out how to solve for organizational succession planning with these startup organizations all across the country. So it's, my hat tip to Veneta and that whole leadership team and all the extraordinary things that they continue to do. But it's also a great flag for the organizations across DC and just how we think about what's next and what are some of the challenges. Thinking through succession planning and ESOs is no small task, and it's important to the continuity and the growth in the fabric of a community. Like every few years, I find new people come into the community and they're like, oh, what do you think? It's like, a common refrain that I hear in DC and in other communities is, well, everyone's so disconnected and we don't know what's going on and what's happening. And when you peel back the layers, you often find that that's actually not entirely true. It's just new perspectives coming into the market who might not have been given that prior access and context. And so you sort of have this like recycling of a similar conversation every 18 to 24 months, and having continuity across organizations as individual people turn over, I think plays a not insignificant role in closing that gap and just kind of squashing that feedback.
I think I agree that you have to kind of puncture the surface a little bit to see the connections. So again, I think we're all environments. I mean, we're all products of the environment we live in. And here we are in probably the most, well, certainly in the U.S., probably the most politically centered city in the U.S. and maybe even in the world. But still, we kind of don't talk about politics on the surface, although you don't have to dig deep to get into it. But I think in some ways the network works the same way. It's it may not be apparent if you're just kind of driving by, but once you talk to someone, like, for example, you mentioned Natalie Buford, and I've met her before. I'm a huge fan of Natalie, but one or two questions and you have that connection, but without it, you might not even know these things are kind of going on. So I think that's an opportunity for us, but it's not a huge challenge to overcome. Is just bringing that network just one more step towards the surface. So it's visible to outsiders and insiders.
So the last question that I'd like to just have your thoughts on, and this goes back to what you just said about Owen, about bringing the network closer to the surface, and Anna talking about succession as two core ideas as you look at the future growth and development of the ecosystem that would be important to focus on. I'd love to hear from both of you, just any other thoughts as you look to where your vision of where the ecosystem could be and should be in 3 to 5 years. What are, a couple of other areas that as an ecosystem we should be focusing on across the board to give us the highest chance of achieving that vision?
I would say in addition to this idea of elevating the ecosystem a little bit closer to the surface, I do think that a healthy venture capital environment goes well for a healthy business environment. And in addition to strengthening connections between the venture groups, making sure that we're helping companies to understand what it means to be a venture-backed company. And also, I think it would be outstanding if we can explore other capital raising models besides venture capital, so that the entrepreneurs that are out there still have opportunities to participate in the capital markets. If you think about some of the statistics, I think if it's correct, there are about 30 million small businesses in the U.S. and roughly 60 million people working in small businesses. And so that's pretty straightforward math. Your average company has 2 people, right? Those aren't necessarily, your average company is not a venture-backed company. That said, those small businesses are the backbone of our economy, and they are the customers and suppliers and partners oftentimes to this venture ecosystem. So finding ways to make sure that the companies that aren't ready for venture funding still have access to capital to grow. This is all part of creating that solid and strong foundation that allows venture capital to find that 1 in 100 that thrives and moves to that next level, and that really can have a big impact on the ecosystem by itself. So it's all together again.
There are 3 things that I would love to see happen or continue to happen. The first is I'd like to see the Amazon HQ2 talent flywheel, come fully into effect for our region. This holds true, I think, not only for Amazon, but for any major tech company that launches an outpost in another city. My strong view is that while in the near term, it might breed some additional competition, and there might be some concern in the local startup community, it's actually going to pull talent, create more competition. And I think over the long term, what ends up happening is it actually de-risks the opportunity in the broader startup market, because then you might have more talent who's either coming in to, come work at Amazon, but maybe you don't, work for the big companies forever and you spin out, or you join a startup, or you come to work for a startup and you're more inclined to take that job and take that risk, because knowing that there are other major tech companies and backstops in the community de-risks the overall opportunity. Hey, if this startup doesn't work out, there are other tech jobs that I can find in this ecosystem. So number 1 is the talent flywheel, and starting to see the reverberations of that benefit our community. The second is reinvestment. I think we are proud to have a number of companies in DC and in the DMV area that are hitting their stride, that are exiting, that are the beneficiaries either of IPOs or major M&A events. It's awesome for the community, but it only has lasting impact if there's reinvestment in the community more broadly. I work at a firm that, was founded by, co-founder and CEO of AOL, Steve Case, which was built in our backyard 35 plus years ago. And, the commitment that Revolution and Rise of the Rest have to reinvest into future generations of startups, not only in our backyard where, Rise of the Rest, we have more than a dozen and a half companies in our portfolio that are in the DMV area. 4 of our new investments in 2020, 2 are into Baltimore, 2 are into DC. You have to continue to have that reinvestment. And so as we continue to see companies exit in our community, I'd love to see more of those founders pay it forward and give back, whether it's with their time, their investment capital, perhaps starting, new organizations. We see great examples of that also happening in places like Indianapolis and Denver and Salt Lake City. And I think DC needs more of that. So that's my second wish for what DC and the DMV look like in 3 to 5 years. And the final is broader partnership and a better coalition between our very strong business community and our startup community. And I'm wildly optimistic that will happen as the business community has come together over the last 2 years with the formation of the Greater Washington Partnership. I'd encourage you guys to get JB Holston on the monthly blend as one of your future guests. He's the new incoming president of the partnership and actually was recruited from Denver, where, he was a longtime leader in the startup and university public sector community there. There's wild opportunity now that community is better organized. They're doing some very forward-thinking work in terms of connecting our university systems to businesses and upskilling and creating credentialing that will help to fill a big skills gap in our ecosystem. But there's a ton that we can also do with forging partnerships and collaborations between the business and startup community. And I'm optimistic that we'll see more of that in the coming years.
Mm-hmm. Great. Thank you so much. That sets out a great pathway for people to follow. I'd like to now hand this over to Tien.
Great. Thank you, Anthony. And thank you guys for tuning in. We're here with Owen Douglas, who's Managing Director of Motley Fool Ventures, and Anna Mason, who is a partner at Revolution's Rise of the Rest Fund. And in this segment, we will talk a little bit about diversity and inclusion in the venture capital industry. And I'd like to ask the two of you about this. So an exciting development these past several months is that we're seeing more awareness around diversity and inclusion, which we talked about earlier as being hallmarks of the Washington, D.C. sort of economy. With respect to the VC community, both nationally and regionally, what are your thoughts around this, and how are your respective firms specifically addressing this important trend? And then I have a sub-question after that, which is, are your funds specifically allocating to underserved markets, minorities, women, and immigrants? And assuming yes, how has this been received by your limited partners? And do they have any potential concerns, whether it's difficulty in finding good deals or that they don't necessarily believe that these segments can deliver outsized returns and alpha, et cetera? So I know it's a long-winded question, but Anna, why don't you lead us off on that?
Sure. Thanks, Tien. Such an important topic. And look, the data is really sobering, and it has been for a long time. We talk a lot about geography with Rise of the Rest, but the statistics beyond that are that less than 10% of venture capital goes to women, far less than 1% goes to Black founders, and so core to the Rise of the Rest, not only ethos and mission statement, but investment thesis, is that there's tremendous opportunity when you partner with entrepreneurs who've been overlooked and underestimated, and by extension, we think undervalued. And I think you see that play out in our portfolio. We're invested in a little over 150 companies right now across 70 cities. So we invest everywhere except for the Valley, New York, and Boston. But while we haven't been, I think, to date as visible and explicit in all the different ways that we think about diversity in investing beyond geography. I think the hard work we've put in behind the scenes is evident in our numbers. 42% of our portfolio is invested into companies led by women or founders of color. 10% of our portfolio is invested specifically into Black founders within that subset of founders of color. And when the benchmark in the industry is so abysmal, you don't necessarily want to benchmark yourself to the industry. You want to benchmark yourself, I think, to your own standards and your ethos of your fund. It's one of the reasons why we launched some new programming actually with Rise the Rest that we just announced a couple weeks ago. Given everything that's happened with COVID and the great pause of all in-person events, we actually had to postpone our 9th bus tour, our Rise the Rest road trips, which we've been doing since 2014, that are typically 5-city, 5-day road trips where we engage 3,000 to 4,000 people, and we really examine and explore entrepreneurial ecosystems and both opportunity and challenges. And we decided to actually take a tour virtual for the first time. So it'll be a grand experiment happening December 1st through December 3rd of this year. But this tour is actually focused explicitly on investing in Black founders and driving conversation around opportunities and obstacles across ecosystem development, infrastructure growth, entrepreneurial support organizations, HBCUs, and pipeline opportunities, and will culminate in our largest pitch competition we've ever done. All of our pitch competitions typically end with $100,000 investments coming out of our fund into these portfolio companies. This is a $2 million pitch competition where Rise the Rest will be investing $500,000 into the winning company and $250,000 into each of the 2 follow-on companies. We're joined with our co-investment partner, Morgan Stanley's Multicultural Innovation Lab, who will be co-investing alongside us, matching our investment dollar for dollar. Two things I would say on this front. One is that we've been doing pitch competitions for a long time, so to a certain extent, this is our lane. But this issue is so critically important, as I think seems like there's finally more of a reckoning around racial diversity, equity, and inclusion across both sides of the table in venture, from an investor and a founder standpoint. And we didn't want this to sort of be a diversity theater sort of shot across the bow. And so thinking about what we could do to intentionally try to index against that was saying, these are actually like normal course of business investments for us. Rise of the Rest, normal course writes $250,000 to $500,000 first checks. So this is the same dollar amount that typically goes into any of our other investments, but we want to leverage the other side of the work that we do and our platform and our ability to connect and convene and drive more attention and ultimately try to drive more access and context for these founders. And one of the ways we're doing that is also by inviting venture funds from all across the country. We're up to about 80 VCs who've, including Motley, who's joining in with us in this effort to take senior level partner meetings with a lot of the startups who end up coming through. So we want to drive more access across the community with this issue. So critically important, and glad that you asked about it, and glad that I think we're all focused on thinking through ways the industry can do better.
I'm really amazed by the fact that you're not just deploying capital in these other cities. You're bringing the whole community together. You're bringing service organizations. You're bringing other investors. You're bringing your co-investors and you're bringing the whole show to the city, as opposed to just going to a city and investing in a particular company and then leaving. You're actually you're building an ecosystem in each city, which is really fascinating. Owen, what about the Motley Fool Ventures? What are you guys, how are you addressing this issue?
So I think, no surprise, kind of diversity and inclusion is something that's near and dear to my heart. When we structured our fund, TN, we did not have an explicit diversity mandate. That didn't come up as something that we wanted to do. But what we do have is what we call our North Star, which comes from David Gardner, one of the co-founders of the Motley Fool. And it's a longer quote, but the first sentence is, make your portfolio reflect your best vision for our future. And so when you think about that, I start to think about, you play a little internal game. You say like, okay, let's pretend we're actually going to be good at what we do, Tien. We're actually going to be, and we're actually going to have an impact on the world. And the question then becomes, instead of sitting back in, 10 years, 15 years from now, looking at the companies you've invested in and say, oh my God, what did I fund? What did I create? Why don't we ask that question of ourselves up front so that we don't get in that situation, and think about the companies that we're investing in and the world that we're helping to create by investing in those. And that's a world where I want it to be diverse. I want women in there. I want people of color in there. I want everyone. It's an inclusive world. And so we invest with the mandate that we are actually helping to shape the future with our capital. And so where we deploy it matters. So we, being a CFO in my background, and for numbers, everything is numbers, right? And so we look at our diversity metrics. We look at female founders. It's roughly 40% of our companies have female founders. 40% of the dollars that we've invested have gone to female founders. People of color, there's a little less than 35%. Half of the founders are from underrepresented groups. We look at it in total, and some of these are overlapping. 78% of the companies we invest in have diverse leadership teams. And so we think about this. We're going, and all the statistics that you hear, and our sample size is still small, but all of these subgroups are overperforming the non-diverse groups. And so this for us, it's something that feels right socially, to be honest, but it's also something that economically it makes sense. And we've talked about our entrepreneurs. We look at our numbers, and we talk to our LPs and often, and they've been very supportive of us and the Motley Fool and what we're trying to do. I think that for me, the idea of inclusion is important, and that we don't want to be exclusive of everyone. We think that it is important for some firms and their missions to focus on specific groups because that intention is needed. But with our fund and with the size and the stage that we are in, we thought that we could have just as big of an effect being inclusive as specialized. And with Rise of the Rest is perfect example. They're doing a great job of seeing the entire country. We've kind of split the world into three parts. It's the DMV, Silicon Valley, New York, and Boston, and the rest of the world. And our goal is kind of 1/3 of each. And we're probably a little short in the rest of the world and a little overrepresented in our hometown, which if we're going to be off somewhere, I think that's okay. And we invest that way. And I think what we're doing to address it, as we looked at our numbers, we only had about roughly 8% of our founders were Black and brown, and that's 30% of the population. And the way that we looked at that is that we're missing opportunities out there. There are great ideas, there are great founders out there that we are missing. So we have a large network, and we could have chosen to just kind of double down inside of our network to find those great entrepreneurs. But sometimes I'm worried about the silos and us duplicating a lot of efforts. So what we decided to do instead was to take an allocation of our fund and invest in a cohort of, like I said, seed stage, early stage venture funds that have specific mandates to either one of two categories. They're either run by Black and brown founders, which we, studies have shown is a big, or run by Black and brown VCs, which is having check writers is a big part of solving a problem, or that their investment theses are on underrepresented entrepreneurs. So we're building a cohort of earlier stage VCs, again, to help that ecosystem, to create that community, and to help share deal flow, to help share best practices, to really find a way to kind of elevate to everyone. So we're excited about that program.
Well, congratulations on all you're doing. I think both Rise of the Rest and Motley Fool are certainly bellwethers in the industry in terms of leading the way with respect to inclusion and diversity. And congratulations to both of you. My question has to do with sustainability of the emphasis on this importance. And I know one way to sustain is if you have the numbers, as you said, Owen, and it's demonstrated that these companies that are founded by Black and brown or women founders are outperforming non-diverse leadership team companies, then that's obviously going to attract capital. But what other ideas might you have in terms of making this more than just a trend or a fad and making it a sustainable and incorporated part of, as David Gardner says, and I'm a huge fan of David, but, making your investment portfolio sort of reflective of your overall vision of the world. How do we do that and influence other investors and capital allocators? Because I do agree with you. A lot of it starts with the money, right? You have capital that's willing to allocate, like the two of you, to these underserved sectors, then that helps a tremendous amount.
And I'll say something a little bit controversial, Tien, just on that. The truth of the matter is, and this is from a finance background, I'll admit, but it's really a follow the money question. There's there are great people like Anna in Rise of the Rest and others who have taken this to heart and are trying to make a difference. But if LPs said that my money is only going to VCs who invest in diverse founders, this would be fixed by lunchtime. It would happen overnight. And so so if you want a simple answer, it's there. If CalPERS says you want my money, you need to be investing in diverse founders, because this is California pension retirement, and my pension retirees are diverse and they need to be benefiting from the economic activity of their people, then it would change, And so to some degree, the answer is simple if people really want to be serious about the answer. Now, we will take the hard route. And the hard route is that you have funds that find those aligned LPs that will allow the funds to have those focus. You find VC companies themselves that are willing to hire and train and give access to people of color so that they can be part of the check writers, so that it happens more organically. And ultimately, you have performance. That's the other big driver. One is the people who control the money telling you to do it, then you just do it. The second thing is when we have more successes, people tend to follow trends, and then that will make it as well. But right now, what's open to us is the hard, long way, which is just making sure that we're creating diverse groups of check writers, or check writers who are open and fans of diversity and inclusion. So I think that's the answer to sustainability.
That's great. Really thank you so much. I love the answers. I think that makes a lot of sense. I like I like the putting pressure on LPs to sort of, force it. Anna?
+1 to all of that. Importantly, the only things I would add are, I think there are a couple other levers that we can pull. So one is data and reporting, and continuing to try to hold the industry to a standard to report progress or lack thereof, I think will be one important step. Another is confronting bias, and that means a lot of different things. It is a far more loaded statement than I think we have time to, and certainly that I'm qualified to go into. But on this topic of bias in investing, there was some great research that came out a couple of years ago, actually with respect to gender diversity and bias in investing, but I think it applies across the board, that was written by some professors at Columbia Business School. It's published in the Harvard Business Review, and it was about the implicit bias that investors of both genders have when they're diligencing a female-led company versus a male-led company. And you can either ask, there are two ways to ask questions about growth. There are two ways to ask questions about your business model. There are two ways to ask questions about your experience. And so thinking through how we as an industry and we as a community of investors are more thoughtful and intentional and aware of how we are diligencing companies to really give everyone a fair shake, I think is important. And this speaks to the longer term opportunities. Like, there's tremendous interest now to take the meetings, and that's a good first step. But are we just so we're going to demonstrate that in fact, there's not a pipeline problem, and there are tons of companies that merit, a fairer shake for investment capital. But are those companies going to get stuck at the top of the pipeline because it's so many one and done meetings? How many are going to come through the funnel, and what is that longer term commitment going to look like? And I think a big part of that is just thinking about how we ask the questions, what we consider to be credible, and if there's a double standard in place, and how we as an industry and we as an investor group course correct against that. I think that's more of the how that I think is the really hard work that requires partnership. And that's my final point on this is there are a lot of organizations out there in the startup support community, increasingly in the funder community, who have been doing this hard work and who have been leading the charge, in support of investing in Black founders and founders of color more broadly, all across the country. And they've been largely invisible to a lot of people and to a lot of funders. It's hard enough in general as a startup support organization to get funding. It's literally like trying to get between the wall and the wallpaper, and all the more so for leaders in more diverse communities. So thinking about how we don't try to reinvent the wheel. It was one of the core reasons why we partnered actually with one of those organizations, OHub, Opportunity Hub out of Atlanta, on the virtual tour that we're doing. We know what we don't know, and we know that there are great leaders out there. And so I think more partnership is the final key element of this to me.
Thank you so much, Anna, and Owen as well. I know Anthony and I are very proud to be associated with the caliber and quality of professionals you guys are. And I also appreciate the way you guys are so responsive to introductions that we make and to helping out. You do really not just talk the talk, but you guys both walk the talk. And I think the region is very, very fortunate to have both of you being such major players in our community. So thank you guys so much. And we really appreciate your joining us as well and sharing your wisdom.
The same goes to you both. Thank you for having us.
Yes, thank you for inviting us. It's an honor to be on the inaugural Morning Blend.
I also just want to add my thank you to both of you for being on the show today. We, as Tian said, we're both so honored to have you, and also thank you both for just the tremendous leadership that you show in our community, and you're both real role models for so many of us in the startup ecosystem in the DMV area. So thank you very much.
Absolutely. This was great. You guys are phenomenal. Thank you again.
Thank you, guys. This was awesome. Let us know when it comes out, what we can do to help and support, and cool to see this partnership coming together at your end. So it's awesome.
Yeah. Thanks so much.
Well, thank you, everybody, for joining us today. We want to also thank our awesome guests, Anna Mason, partner at Rise of the Rest Fund, which is part of the Revolution family of funds, as well as Owen Douglas, who is the managing director at the Motley Ventures. So tremendous insights, extremely inspiring. It was great to have them. Also, please tune in for our November video podcast. We will be featuring two titans of the region, Troy Stovall, who's the new CEO of TEDCO, which is the Maryland Technology Development Corp., as well as the CEO of the Commonwealth of Virginia's Center for Innovative Technology, Bob Stoll. Looking forward to having those two gentlemen on. They are both covering big swaths of the region and as investors and also as incubators of great technology.